Hello friends, I welcome you to the next lecture on Indian Accounting Standards. So we are going to take up Ind AS 40, which corresponds to International Accounting Standard 40. We are going to talk about investment properties. So this standard is going to deal with investment properties. So when to recognize investment property as an asset in our books of account. Initially, at what value we have to recognize investment property in our books of account. For subsequent measurement, what model you have to follow for subsequent measurement, how to deal with disposal of investment properties, how much of gain or loss to be recognized, what are the different disclosure requirements as per the standard, we are going to discuss under Ind AS 40. Okay. In this presentation, we are only going to discuss about what is the meaning of investment property. So this video would only deal with understanding the meaning of investment property. So let us go ahead with it. So what is investment property is what we are going to deal in this presentation. So meaning of an investment property. So what is investment property? It is property. Property means land or building, or a part of land or building, or it can be both. So we are talking about land or building, part of land or part of building, which is held by the entity for the purpose of earning rentals or for capital appreciation. So we are having a property that is land and building which we are holding for the purpose of earning rentals or income by way of capital appreciation. Such property can be considered as investment property. But this property should not be held for use in production of goods, provision of services, administrative purposes, and such property should not be held for sale in the ordinary course of business. So if you are holding any property, land or building, for sale in the ordinary course of business, it satisfies the definition of inventory. Accounting for it would be depending upon the requirements of Ind AS 2, not based on Ind AS 40. So we are talking about property that is land or building, part of land or part of building, which is held for earning rentals or for capital appreciation. It is not held for use in production of goods, provision of services, administrative purposes, and it is not held for sale in the ordinary course of business. If it is held for sale in the ordinary course of business, it satisfies the definition of inventory. Ind AS 2 will deal with it. If you are using it for the purpose of production of goods, provision of services, administrative purposes, it is considered as an owner-occupied property. It will be covered within the meaning of the term property, plant and equipment. Accounting would be based on requirement of Ind AS 16, not based on Ind AS 40. Okay. Now, what is owner-occupied property? Owner-occupied property is property which is held by the owner or by the lessee under a finance lease for use in production or supply of goods or services or for administrative purposes. So we are going to talk about how to do accounting for investment property in the books of the owner or in the books of the lessee who is holding it under a finance lease. So if you have purchased, if you have taken land or building under a finance lease, if you are the lessee, based on Ind AS 17, if you have taken the land or building on finance lease, the lessee is entitled to show land or building as an asset in his books. Lessor has to de-recognize the asset from his books of account, and he has to only recognize receivables in the place of asset. So in this standard, owner and lessee who is holding the asset under finance lease, how are they going to account for investment property in their books of account is what we are going to discuss in this standard. So owner-occupied property is property which is held for use in production of goods, provision of services or for administrative purposes. If such properties are held for sale in the ordinary course of business, it becomes inventory. It is not even owner-occupied property in such a case. Okay. Now, what is the objective of the standard? The objective of the standard is to prescribe accounting, treatment and disclosure requirements for investment properties. Okay. Scope of the standard. The standard shall be applied in recognition. So when to recognize investment property in our books of account as an asset, initial recognition, subsequent measurement, disclosure requirements. This is the scope of the standard. Apart from that, this standard will also talk about how to measure the value of the asset in the books of the lessee who has taken it on a finance lease. So if you are a lessee, you have taken an investment property on finance lease, at what value to show it in your books of account will be we can say prescribed by the standard. if you are a lessor and you have given your investment property on an operating lease, not on a finance lease, if you have just given your property on an operating lease, at what value you have to show it in your books of account will be covered by the standard. Okay. Scope exclusion, certain items are outside the scope of the standard. Classification of leases as finance leases or operating leases. So whether a lease is a finance lease or operating lease, we have to refer Ind AS 17 for that classification, not this standard. Recognition of lease income from investment property. You have given investment property on operating lease to other party. You have given your building on rent to other party. You have given your land on rent to other party. So when to recognize that rental income, how much of the rental income to be recognized in the current period will be decided based on the revenue recognition related standard, that is Ind AS 18. This standard is not going to talk about when to recognize rental income in your books of account. So that is not covered by the standard. Okay. Measurement in lessee's financial statements of property interest held under a lease accounted for as an operating lease. So there can be a situation where a lessee takes a land or a building on an operating lease from the landlord, and then he can also give it on sublease. In such cases, the property which he has taken an operating lease and which he has the capability of giving it on sublease, in such cases the interest which he has in this property can also be shown as an asset in the balance sheet, but at what value to be shown is outside the scope of the standards. There can be situations where if you are a lessee, you have taken an asset on an operating lease, you can still show an asset in your books, but the asset will not be the land and building, it will be the interest which you have in this land and building. Okay. How to measure the value of that asset is outside the scope of the standard. Okay. Measurement in lessor's financial statements of its net investment in a finance lease. When a lessor gives an asset on finance lease to a lessee, he de-recognizes the asset from his books and in its place he recognizes receivables. So at what value to show that receivable is outside the scope of the standard. Ind AS 17 will talk about it. Okay. Then accounting for sale and leaseback transactions. You sell an asset and again take it back on lease. How to deal with that transaction in your books of account is again within the scope of International Accounting Standard 17 corresponding Ind AS 17. Disclosure about finance leases and operating leases. Certain disclosures are required as per finance lease and operating lease as per Ind AS 17. So those requirements are not covered by the standard, they will be covered by a specific standard. So the logic is very simple. Whenever there is a specific standard relating to a particular matter, that specific standard will apply and a general standard is not going to apply. Okay. Next, biological assets relating to agricultural activity. So if you have some biological assets relating to agricultural activity, those biological assets are not covered by the standard. You can have producer plants. Producer plant is a plant, it's a living plant which can bear produce for a period of more than 1 year. Those plants are called as producer plants. They are covered within the definition of the term property, plant and equipment covered by Ind AS 16. You have herds of buffaloes, herds of sheep, goats, etc. It's biological assets relating to agriculture activity. Okay, farming business, it's an agricultural activity. So these assets are outside the scope of the standard because there is a specific standard on it, Ind AS 41, agriculture, which deals with it. Okay. Mineral rights, mineral reserves such as oil, natural gas, similar non-regenerative resources. So these are outside the scope of this standard. Okay. Definitions. Investment property, we have already gone through the definition. This property means land or building which is held for earning rentals or for capital appreciation, not held for sale in the ordinary course of business, and it is not held for use in production of goods, provision of services or administrative purposes. Such properties are called as investment properties. Owner occupied properties are properties which are going to be used in the production process, provision of services or for administrative purposes. Carrying amount is the amount at which the assets are recognized in the balance sheet. So this is the amount at which they are recognized in the balance sheet. Such amount is called as the carrying amount. Cost. So what is cost? Cost is the cash or cash equivalent paid or fair value of other consideration incurred to acquire the investment property, or the amount which we have spent during construction of the property is considered as cost. So it is the cash or cash equivalent paid or fair value of any other consideration paid to either acquire the investment property or to get the investment property constructed. So that is considered as cost. Fair value, the definition of fair value is little different in Ind AS. When compared to our current accounting standard, the definition of fair value is different in Indian accounting standards and IFRS. The definition of fair value is, this is the price at which that will be received when you sell an asset. It is the price that will be received to sell an asset when you sell an asset, or this is the amount which you have to pay to settle a liability in an orderly transaction between market participants on the measurement date. So this is the amount which you expect to receive when you sell an asset, or this is the amount you have to pay to transfer a liability in an orderly transaction between market participants on the measurement date. That value is called as the fair value. So we can simply say this is the amount I expect to recover when I sell an asset, and the amount will depend upon the price at which the asset would be exchanged between market participants in an orderly transaction. Okay, so that is the definition of fair value. Now let us compare property, plant and equipment and investment property. Investment property can generate revenue independently. Property, plant and equipment can generate revenue only in combination with other assets. I have given an example. If you have a building which is used for administration purposes, it can generate revenue only in combination with other assets. So administrative building is incapable of generating revenue on its own. It can only participate in an activity, and it can cooperate in an activity which generates revenue. That means the administrative building along with the factory, along with other functions, they can generate revenue together but not standalone. But if you give the same building on rent to others, it will be capable of generating revenue independently. So investment properties are capable of generating revenue independently, whereas owner-occupied properties are not capable of generating revenue independently. Only in combination with other assets they can generate revenue. Okay. Now, examples of investment property: land held for long-term capital appreciation rather than for short-term sale in the ordinary course of business. You are holding land for long-term capital appreciation, and you are not going to sell it in the short term. You are not holding it for sale in the short term. Okay, such land will be an example of investment property. Land held for a currently undetermined future use. You are holding some land, but you have not determined what is the use of this land in the future. In such cases, such land can also be considered as investment property. So if you are holding land, currently the use has not been determined, it can continue to be shown as an investment property. Okay. Then a building owned by the entity or held by entity under finance lease and leased out under one or more operating leases. So if you have a building, you have leased it out on operating leases, it becomes an investment property to you. A building that is vacant but it is held for giving it on lease to somebody. You have a building, it is presently vacant but you are holding it for giving it on lease to somebody. Whenever whenever a customer approaches you, whenever a proper lessee approaches you, you are ready to give it on lease to him. In such case, it will continue to be considered as a investment property. Property that is being constructed or is in the process of construction, so and developed for future use also as investment property is considered as part of investment. So you are constructing a building and your intention is to let out the units under operating lease. In such cases, the building under construction is also considered as an investment property. Okay. Now, what are not investment properties? Let us see what are not investment properties as well. Properties intended for sale in the ordinary course of business. So if you are holding any property for sale in the ordinary course of business, it becomes inventory. It is not considered as investment. Or it is in the process of construction or development for such sale. You are constructing a building for the purpose of selling it as soon as it is complete. So in such cases, you are holding a building which you want to sell it in the normal course of business, it becomes inventory. So we can say stock of property or WIP of property will be considered as inventory. It will not be considered as an investment property. Next, owner occupied property or held for future use as owner occupied property. So if a property is owner occupied or property is held for future use as owner occupied property, in such case it is outside the definition of the term investment property. Property used by employees, you have given some quarters, residential units to your employees for their accommodation purposes, it will be considered as used by business. Okay. An owner occupied property awaiting disposals. If you have a property which you have decided to sell in the near term and it forms part of a group of assets which is going to be disposed by the entity in the near future, if it satisfies the definition of an asset held for sale under Ind AS 105, it will be called as an asset held for sale, not as an investment property. Okay. So if you are having land and building, it is part of a business unit or it is part of a division. Entity has decided to dispose of the division, group of assets is going to be disposed, and within 12 months entity has decided to dispose of these assets and they want to recover the carrying amount principally through sale. It satisfies the definition of an asset held for sale under Ind AS 105. It loses the classification of an investment property and it is considered as asset held for sale. Measurement under Ind AS 105 is fair value less cost to sell. Okay. Next, property lease to others in a finance lease. So if you have given your property on finance lease to others, in such case you have to remove the asset from your books of account and you have to recognize related receivables. You cannot show that property as investment property in your books anymore. The lessee who has taken it on finance lease from you, he can show it as an investment property in his books. If he wants to earn income by way of rentals or by way of capital appreciation from the property which he has taken it on finance lease from you. So if you have given an asset on finance lease, you have to de-recognize the asset, recognize receivable. For the lessee, it can become investment property. Okay. Now, sometimes properties can have both the features of being an owner-occupied property and also a investment property. A part is owner-occupied, there is a building, a part of the building is owner-occupied, a part is held for earning rentals or for capital appreciation. So how do you deal with the situation? So what standard says is, if parts can be sold separately, if you can sell the parts separately, if you can give such parts independently under a finance lease, separately you can give them under a finance lease, in such cases you have to account for them separately. So if you can dispose them separately, if you can give it on finance lease separately, then definitely you can account for them separately. That means the part which is owner occupied will be considered as PPE, property, plant and equipment. The part which is held for earning rentals or by way of capital appreciation will be considered as an investment property. Sometimes what may happen is, the portion of the building which is owner occupied is very insignificant when compared to the portion of the building which is held for earning rental income or by way of capital appreciation. In such cases, the entire building can be considered as investment property only. Okay. Now we'll see an example. Ancillary services. There can be situations where the landlord of a building may provide services like security, maintenance. So you are giving a building on rent and you have also decided to provide some security services and maintenance services. And what happens is, in the entire building you also occupy 1 or 2 units for the purpose of providing the services to the tenants of that particular building. In such cases, if you are occupying insignificant portion of the building to provide these ancillary services, the entire building will be considered as investment property only. Okay. If it is insignificant to the whole arrangement, the property will be treated as investment property. That is what the standard is. Owning and managing hotel. Let us suppose a landlord gives his property to a hotel and he also manages the hotel. That means the landlord of a building is using his own property for running a hotel. In such cases, we can say that he is using the property for doing business and he wants to get income not by way of giving it on rent to others. He is more interested in the cash flows of the hotel business. In such cases, it cannot be said that he is holding the building to earn income by way of rent. He is using the building for the purpose of running the business of hotel. In such case, it becomes property, plant and equipment for him. He cannot be shown as investment property. Okay. So if he just gives it on rent and he is only exposed, he doesn't have any other loss, he doesn't have any other risk, the only risk is non-payment of rent, that's it. In such case, he can continue to show it as investment property. But if he is exposed to the risk of fluctuating cash flows from the hotel, in such cases, that means he has got involved in hotel business, he has to show it as property, plant and equipment. It cannot be shown as investment property. Okay. Next, criteria to classify a property as investment property. What the standard says is, sometimes judgment is necessary to classify a property as either investment property or property, plant and equipment. In such cases, we have to use, the management has to use its judgment. To apply that judgment, we have to develop a criteria and we have to see that the criteria is applied consistently, and the criteria to classify a property into investment property or property, plant and equipment should be applied consistently, and that criteria has to be disclosed as well. And in certain situations, the role of judgment increases. Let us suppose you are acquiring a group of assets and one of the assets is investment property, land and building. Now when you are acquiring a group of assets, we have to check whether this group of assets satisfies the definition of a business within the meaning of the standard Ind AS 103 business combinations. So when you are acquiring a group of assets, sometimes you are acquiring a business. If you are acquiring a business, in such cases, accounting for acquiring a business is not covered by this standard. And in that group of assets, you can also have some land and building. But how to do accounting for such land and building? If you are purchasing a business, as part of acquisition of business, if you are getting some land and building, then accounting for that land and building is not covered by this standard. You have to go through Ind AS 103 business combinations to decide the accounting which has to be adopted for such land and building. Okay. Next, parent leasing property to subsidiary. There can be situations where a holding company may give its property to subsidiary company, and subsidiary company is using that property for production of goods, provision of services, or to carry on its business. In such cases, for the parent in its standalone balance sheet, that means not the consolidated balance sheet, in its standalone balance sheet, that property is an investment property because it is given it on rent to its subsidiary and it is getting rental income. But in the consolidated balance sheet, we treat the holding company and the subsidiary company as one entity. The group is treated as one entity. In this case, if you see from the group's point of view, that property is being used for group's business. Subsidiary's business becomes group's business. If subsidiary is using the property to do business, that means the group is also using the property for doing business. In such cases, for consolidated balance sheet purpose, it will be shown as property, plant and equipment. It will not be shown as investment property. So standalone will be shown as investment property. For consolidation purpose, it will be shown as property, plant and equipment. Okay, so this is what the standard has to say about parent leasing out a property to subsidiary. Now, transfer from one class to another. Can there be a shifting from investment property to owner occupied property, owner occupied to investment property? Yes, situations are possible. When such things are going to happen, let us see. Transfer from investment property to owner occupied. So that means we have transfer from investment property, that is Ind AS 40 to Ind AS 16. Okay, when will that happen? On commencement of owner occupation. So there was a building which we had earlier given it on operating lease. The lease period has come to an end and the owner has now decided to use that building for his business purpose. That means now the property will be reclassified from being an investment property to an owner property. Okay. Then transfer from investment property to inventories. There can be situations where you were holding a building for the purpose of earning income by way of rent. Now you have decided to sell away the units of the building. In such cases, so earlier you had a big residential complex. You had given the units in that residential complex on rent to tenants on an operating lease. Now you have decided to dispose of those units. In such cases, it becomes inventory. Okay. Commencement of development with a view to sale. So there can be another situation. You have some land. You held the land for long-term capital appreciation, and now you feel the value has appreciated sufficiently. Now you want to dispose it. Before you want to dispose, you want to develop the land. You want to do plotting, etc., and then you want to sell it. In such cases, the day the development activity starts, your intention has changed and it will now become inventory from that date. So the date when the development starts, it becomes an inventory instead of being an investment property. Okay. Transfer from owner occupied to investment property. Now, example is very simple. I was having a building which I was using for administration purposes. Now we have vacated the building and now we are searching for tenants. In such cases, we can now consider it as an investment property. That means the end of owner occupation can be a signal that the property has to be now reclassified from being an owner occupied property to an investment property. Transfer from inventory to investment property. Given an operating lease, you had some inventory which you wanted to sell. You were not able to find any buyer, then you give it on rent to somebody else. In such cases, such properties will be reclassified from being an inventory to an investment property. Okay, but there will be no change in carrying amount because we have only one model which is prescribed for investment property, that is cost model. That means whatever is the current carrying amount, at that amount only we are going to reclassify from investment property to PPE, or from investment property to inventory, or from inventory to investment property, or from PPE to investment property. So there will be no change in any carrying amount. Okay, classification will change, but the carrying amount is not going to change. Now a specific discussion is there. If property is disposed without development activity, it would continue to be classified as investment property till the day of disposal. So if you had some land which you were holding for long-term capital appreciation purpose, till the day you actually dispose the land, this classification of being investment property will hold good. But this will not hold good only in a situation where you were holding land for capital appreciation. Before disposal, you have decided to develop the land, do some plotting, etc., and then sell it. In such cases, the day on which you have decided to start development activity, on that date it has to be reclassified from being an investment to an inventory, and then when it is sold, the amount which we get from sale would be shown as sales and the cost of inventory will be shown as cost of goods sold. So if you are having land which was classified as investment property, which was held for long-term capital appreciation, and till the day it is actually disposed, it will continue to be shown as investment property. But suppose you have decided to develop it and sell it, in such cases the date the decision to develop the property and then sell it has been taken, on that date we will change it from being an investment property to inventory. Okay, so this is what the standard has to say. Okay, so in the last presentation we learned the meaning of investment property. Thanks a lot.